Hello fellow bodegans. I decided to make the first of what will be a handful of videos to which you can refer back to as a trading resource. I started this journey like I wrote in the Money Bodega mission statement to help fellow traders by sharing my trading ideas. I am well aware that there are better traders than I am out there. I can name a dozen off the top of my head. I'm sure you can too. I'm thrilled about that fact because as a lifelong learner, I am always looking to learn from the best and share what I have learned. To that end, let's begin with a simple strategy that will help you catch big winners early on. Trend lines in finance by definition are lines that can be drawn between a minimum of 3 or more price pivot points. They can be horizontal or diagonal, declining or rising, usually parallel, but often long term rather than just short term. So as you can see, there are trend lines on this chart that extend back to 2017. Okay, and the reason for extending those trend lines is because they come back into play as the stock price approaches those trend lines. So never forget your major trend lines. Okay, let's go to a daily chart to see our most recent trade. We initially entered this stock on the 11th of February when it broke out above this trend line on what is above average volume. Okay, we could have done so a month earlier um, here on the 7th of January, again on high volume. Um, we did not. There was an alert for it um, uh, because uh, I do watch or I do have alerts on my trend lines. Um, but I believe that we saw this candle and we said that the buyers came in and then the sellers took it back down. This is a candlestick. I believe that's an um, evening star candlestick. But if you bought this with an intermediate term um, trade in mind, you were fine because while it did gap down the next day, it managed to stay above the previous candlestick and it filled the gap on its way back up to that trend line and the subsequent breakout. So would have been fine taking this trade, holding on to it, as long as it didn't breach the bottom support line here. Um, you were in a fine trade. It would have just been a matter of whether you were still in a year-long consolidation, much like here, for those who took it here and wind up, they were pretty much 7 months early. And then again here, and realized they were probably more than a year early. Okay, so false breakouts do occur. Um, uh, you can always get out of them. That's why you have stop losses. Um, but when you really have a nice setup where the volume, although it's above average, it is very high above average here. And then again here. And then you have multi-day um, high above average volume as the stock was rising. So these are all probably um, institutional. Well, it's not all institutional money, but when you get this type of volume, you can bet that it's institutional money coming into the stock. So I'm comfortable with the trade that Um, I've taken Friday again on high volume. I wish this was more like a hammer. That would give me a lot more confidence. I'd like to see what happens in the next couple of days, whether it retests the trend line again for support, or it forms, a gap up, or maybe even a bullish engulfing candle that leads to further gains. Okay, so let me just show you the weekly chart also. I like to look at things in the broader terms. 9 day I have on my charts as well, and then the monthly, just so that I can see where the phase of the move is, and you can tell that we're early. We're very early. Now, others might say, well, this could just be another consolidation, um, another year-long consolidation between the $16 level and the $4 level. Um, how do you know it'll go higher? I don't. That's why I have initial targets, first targets and secondary targets, and I use those to trade, and then I revisit the chart and kind of say, okay, well, it looks like longer term it might consolidate, or longer term it might go further up. So I'm okay. A lot of times I will revise my second target as I see um, stronger interest in the stock. Okay, more volume coming into the stock. So there we have it. Um, I will also add my Fibonacci retracement line, project for target projections if I'm on a swing trade like this one. Um, uh, and then I use TC2000 software, but many other platforms allow drawing and annotating charts. TC2000 allows me to place those alerts at those trend lines. Um, so I do not have to watch the stock for a year before it breaks out. Um, I want to draw your attention again to the bottom of the chart where I've added volume. I want to point out the record volume accompanying this breakout after 1 year consolidation. In a later video, I'll explain the moving average um, and on balance volume and why they should be rising, both very important when deciding to enter a trade. As a trader, um, if I don't see enough smart money confirming what I see, I have to pause and ask why. That is why I wait for volume to confirm the move. Being humble and somewhat skeptical has prevented me from getting into false breakouts. Um, oh, by the way, TC2000 allows for volume alerts also. So I can come to this moving average, set an alert for when this stock breaks out above the moving average on a 1 month or even a year or 2 years. Um, and we can see when it's greater than or less than, or a number of different variations or parameters. All right, so that's it for this video. Um, I wish you all the best this coming trading week, um, and I hope that all your dreams come true. Take care, fellow bodegans.